Hello and welcome back to Stock Daily. It's Thursday, August 14th, 2025, 11:25 p.m. Eastern. Today's market opened lower across all four major indices after the Producer Price Index came in far hotter than expected, reducing expectations for rate cuts. The Russell 2000 led the decline, down 1.29%, slipping back toward its earlier breakout level. Intel is now on track to join MP11 as a national strategic asset, with new developments that could reshape its future. We'll take a look at its second quarter holdings and the unveiling of three previously undisclosed first quarter positions. We'll also discuss the world's second largest semiconductor equipment supplier, just behind ASML, which saw its shares plunge about 10% after earnings. But before diving into individual stocks, let's review the data and news. The surprise came from the PPI, the inflation measure tracking producer prices, which rose 0.9% month over month, far above the expected 0.2% and the highest forecasts. Year over year, PPI rose 3.3% compared to expectations for 2.3%. Core PPI climbed 3.7% year over year, well above the forecast of 2.9% and the prior reading of 2.6%. The Bureau of Labor Statistics noted that over three-quarters of July's increase was driven by final demand services, which rose 1.1%. Within that, personal consumption expenditure components such as portfolio management fees surged 5.8%, compared to June's 5.1%, reflecting rising financial service costs alongside higher asset prices. Following the PPI release, several Federal Reserve voting members commented that a large September rate cut is unlikely. San Francisco Fed President Daly suggested that a 50 basis point cut would send an emergency signal about labor market weakness, which she does not believe is warranted, favoring instead a gradual shift toward a neutral policy stance over the next year. Louis Fed President Bullard noted that tariff-related inflation pressures should fade within 6 to 9 months, but emphasized it was too early to decide on the September meeting. Market pricing for a September 25 basis point cut remains high at around 92%, down from 100% yesterday, while odds of a 50 basis point cut have evaporated from nearly 6% to 0. Initial jobless claims for the week ending August 9 fell to 224,000 from 226,000, better than the 228,000 expected. Continuing claims also dropped to about 1.953 million. Turning to the White House, there was no major policy announcement during today's 1 p.m. Oval Office event. Instead, the president marked the 90th anniversary of the Social Security Act alongside the SSA commissioner. Markets barely reacted, moving less than 0.3% afterward. On Intel, Bloomberg reports the Trump administration is in talks to take an equity stake in the struggling chipmaker to support domestic manufacturing expansion. Details, including investment size and whether the stake would be bought at a premium or a discount, are still under discussion. A premium purchase would benefit shareholders, a discounted one would dilute equity and pressure the stock. Technically, Intel has broken above resistance at $23.88, with moderate resistance levels ahead. Positive deal terms could lift the stock toward the $28-30 range, but a reversal toward $20 remains possible if sentiment sours. Next, Berkshire Hathaway's Q2 13F filing revealed a small purchase of U.S. steel worth $161 million, less than 1% of its $300 billion portfolio, at prices likely in the $311 range, currently showing a paper loss. It also disclosed earlier confidential purchases of Jacobs Engineering, D.R. Horton, and Nucor, totaling about $1.78 billion, also less than 1% of assets. Berkshire trimmed Apple and Bank of America positions. Humana shares surged 12% after hours to $305, a key technical level. If it can break above $323, it could establish a sustained recovery. Long-term investors may hold for a year or more, but those unwilling to take regulatory risk might use this rally to rebalance. In financials, JPMorgan has rallied sharply since breaking $155 resistance, reaching $172 after hours. While upside targets at $176 and $195 are possible, the stock is technically overbought, making new entries less attractive without a pullback toward the $140 to $155 range. Finally, Applied Materials, the second largest semiconductor equipment supplier globally, fell 13% today. Fiscal Q3 adjusted EPS came in at $2.48, beating 2.36 estimates, with revenue of $7.3 billion versus $7.2 billion expected. But fiscal Q4 revenue guidance of $6.7 billion fell short of the $7.33 billion consensus. Management cited macroeconomic uncertainty, potential U.S.-China trade and tariff impacts, and delayed orders from major customers such as TSMC and Samsung. China accounts for roughly 37% of its revenue, making it vulnerable to future export restrictions. Technically, the stock broke below its 200-day moving average, with potential support in the $150–123 range. Overall, trading volume today was average, and the broader market remained range-bound. The Russell's pullback is still within normal retracement levels, holding above 228. For now, this is a market driven by both economic data surprises and sector-specific headlines, with key watch points in upcoming Fed decisions and semiconductor sector developments. That's today's complete market wrap. We'll be back tomorrow at the same time.